How are we doing? So today, I should have done this video a long time ago to be fair, but I'm going to capture it today. And today we're going to be talking about candlesticks and the importance and understanding candlesticks, what they mean, what they represent. It's basically the fundamental understanding of knowing trading is being able to read the language of price action. Because it doesn't matter what indicator you're using, it doesn't matter how you're trading, unless you understand price action and exactly what price is telling you live and direct as it's happening, you're not going to fully understand or comprehend anything. Furthermore, if you've already got a plan, but then price action is telling you live and direct that it might be doing the opposite, that enables you to then potentially change your bias or damage limitation. So candles are super important. So as you can see, this is just my chart from yesterday. We can clean that up a little bit. But we're just concentrating on the candlesticks anyway. Don't be too worried about anything else. So as you can see up the top here, we've got different time frames. So this time frame can start from the month, week, day, and as we go down, that will change the chart to represent, every candle represents that singular time frame. So we're currently on the 15-minute time frame. So each candle represents 15 minutes of price action. So when I always say to you guys, if in doubt, zoom out. If you're on the 15-minute candle, you can basically have 4 of those guys within the 1 hour candle. So if you're in doubt with what the 15-minute candle is saying, if you zoom out to the 1 hour, it will give you a better understanding, a clearer vision and understanding of what's happening. Likewise, the 1 hour candle, if you zoom out to the 4 hour, there's obviously 4 1 hour candles within that candle. So that's the basics of candlesticks, right? So I'm just going to go into now how they are formed and what you need to know about candlesticks in general. So say, all right, we've got a candlestick here. That's red. Here's the wick above. Here's the wick below. Right? So that's a bearish candlestick. So that means price is heading down. Points to note, candlestick is made up of 4 different sections, essentially. We've got an open, a close, and the high of the candle and the low of the candle. So what does that mean? So basically, within this 15-minute candle, for example's sake, within this candle, we'll say 15 minutes, price moved 230 points, okay? But it opened, so if it's a bearish candle, it's going down, it always opens at the top. So this would be the open. Open. This would be the close. Okay. So that would be the close. But you can notice that price opened there, but then it made its way to the upside before going all the way to the downside and then finally closing there. Okay? Does that make sense? So that's all you really need to worry about with a candlestick now. So for example, this is a bullish candle. We'll just call this bad boy in green. We've got a wick. And we've got another wick. So the opposite of what a bullish candle is. So we've got the open at the bottom and we're heading the way up. So that's the close at the top. This is where we went down to and that's where we went up to, but that's where we essentially closed, right? I don't want you to worry too much about candles. There is different types of candlesticks. You can just go ahead and Google them, but the vast majority of them are bullshit. You don't need to worry yourself with them. It's just causing more confusion than what it's worth. So there's two types of candlesticks that I pretty much look at, and it's real simple stuff. So I'll just go ahead and show you. So we've got Doji candles, which basically means tiny body with big wicks. These wicks can be, come in all different shapes and sizes, but if they're pretty much the same size, with price being tiny in the middle, that essentially means buyers and sellers are in the market and there's a lot of them, but nobody's actually winning. That basically means that price is undecided within that candle. Does that make sense? So that means that the buyers aren't winning, or the sellers aren't winning. So this is used usually when, like I said, price is undecided, or if price is about to flip. So this is just key points, key markers that you need to worry about. And these can come in all different shapes and sizes, as I said before. That can be, that can be like that. It can be just like a little wick to the upside, a big wick to the downside, whatever. Likewise, the polar opposite, if you've got like a bearish one, same thing. It doesn't really matter, but just understand the length of the wicks in proportion to the area that price is in or is reacting from is the key takeaway from this. So I'll show you an example, a live example from yesterday's chart, or any chart you want. I can show you exactly why reading price action is fundamental. So there we've got the Doji candle, right? That's a Doji candle. Small body, massive legs, essentially. But then we've also got a full volume candle, or a Maribozu candle. So this would just be basically a full bodied candle and a tiny wick. These wicks can vary in size, but the main focus is how big and thick is that body. So that for us means that price started here and we've had a big push to the downside, which basically means there's a lot of sellers in the market. And this all here is basically unfairly traded price, as in buy, sell, but the majority of the time, sellers have won that market for that candle, for example's sake. There's a lot of selling pressure. That is the thick body. So the same thing applies: open, close, low, high. Well, that is just really bearish pressure. So now you've got a basic understanding of candlesticks, how they're formed, and what you really need to look out for. I'll just jump down now into the markets from yesterday. So this is the Nasdaq chart. This is the pre-market setup that we had yesterday. So as you can see, we spoke about daily price action is always boxed off up until New York Open. We had engineered liquidity to the top, which is obvious. That was going to be taken at some point, and the main target was this 1 hour fair value gap. Now, what can we see from this 1 hour fair value gap? Well, essentially we've got one rejection there, which is a big wick, a big rejection. That means that price went there, visited there, but did not close below. It actually rejected away, which means it wants to go higher. So yesterday we came in and we saw the exact same thing. Price came in at 8:30 yesterday, rejected away. Now, what else can we see? This 1 hour fair value gap is also now a support level, as price has come into it several times and bounced away. Several times and bounced away. So this trend line that we've got here is a trend line that we created on the 4 hour candle from the 1st of August, which is the start of the month. And so far that has been holding. We've had 1, 2, 3, 4, 5 touches on that trend line, which means it's holding. We are looking, don't forget, to take out all-time highs, because Nasdaq is very bullish. However, we don't want to presume or predict that's going to happen. We're just going to watch price action, and we're going to understand when this will occur. All we need to do is identify these key zones: 1 hour fair value gaps, 2 hour fair value gaps, 30-minute fair value gaps, points of interest, all these sort of areas, support and resistance zones. they all sort of tie in together. It's the same sort of thing, levels, right? But as you can see, we identified that level pre-market setup. We've had a few reactions from it. We've also got a trend line thrown in the remix, which basically is an extra level of support. So we've got a support in this 1 hour fair value gap. We've got a support level in this trend line, which basically means this area right here is a strong area. Are we going to continue to the upside in alignment with the overall trend, or are we going to come a bit lower before then going to the upside? That is the magic question. But that is how you understand how important candlesticks are within trading. It's live and direct price action. You can know and understand what's going on as it's happening. So basically, a 1 hour fair value gap is, if we jump onto the 1 hour, we can see that this candle here is full bodied, tiny wicks, which basically means price was traded unfairly for that amount of time, which basically means from the highest wick to the lowest wick, the price in the middle of that is the fair value gap, where price likes to be attracted back to it. Doesn't happen every time, but price, more often than not, will be attracted into that zone, as we can see perfectly here. And also we've got the trend line, which perfectly aligns. So that is why we need to know candlesticks, reading price action, and the importance of that whilst we're trading. Because no matter what strategy you're using, SMT, ICT, volume, clear sense of direction trading, it all fundamentally comes down to price action is paramount. And I don't care what any other traders say. They might have golden magical indicators, but if you can read price action and you can get good at reading price action, you can know and understand what is happening as it's happening. So there you go, guys. Hope you enjoyed that one, and I hope that was of value. Stay posted for more videos. Thank you.